Hey everyone, I'm Raj Malhotra, Senior Trading Mentor at ITPM. I want to wish a happy Thanksgiving to all of you. So, as we're nearing the end of earnings season and the broader indices are nearing year to date highs, I want to highlight a very interesting divergence that seems to be setting up for a trade going forward. Now, it's no doubt that the last CPI has been an impetus for all markets to rally higher, and it's clearly signaled lower inflation, and that signal has had the direct effect of lowering the 10-year yield. So as I'm filming this, about a month ago, 10-year yield had peaked at around 5%. Now it's trading around 4.4%. Now, when in turn, that's obviously led to rallies for all U.S. indices. And I think this rate move should be especially constructive for one sector going forward, which is the small cap sector. Now, the assumption by most was that higher borrowing costs would just crush small caps. And in a general sense, it has compared to the other indices, even if not on an absolute level. So behind me, if you just look at these relative year-to-date charts. So the S&P is up about 19% year-to-date as we film this. The NASDAQ ETF, the QQQ, is up a whopping over 47% this year. And the Russell, which has been a big lagger, is up just about 2% this year. So obviously, there might be some room to catch up. Now, however, since the day before the November CPI report, now granted, that is a small sample size. It's only been about a little over a week. But the IWM, which is the Russell ETF, is up about 5.5%. And the S&P and the Qs are only up about 3%. So even if you would assume the recent market move was a short covering rally, this relative outperformance of the Russell since the initial November 14th big market move, and the fact that it hasn't given back any of its gains tells me that there may be relative strength going forward. Now, should rates stay here or trend lower, we could definitely see a rip your face off rally into year end and into the beginning of 2024. And I'm saying that the broader market, the S&P, could rally 10 or 20% higher. And if that happened, the move in small caps might be even bigger than that. A combination of lower rates, better than expected data, market being short, you could really see a violent move going forward. And if it was, I think the small caps would actually outperform this time. So if you look in the options market, there has been a lot of upside call buying in the IWM, whether it's by hedge funds or trading desks. It's hard to know. It's hard to know whether it's just hedging or outright bets. Probably a little bit of both. But due to the valuation differences right now that exist between big caps and small caps, the big names that rallied so much this year, names like Nvidia and Meta, they would probably also rally. But if the S&P rallied to say 5,000, these names would probably rally at more of a market perform level. However, what I could see is a broadening out of this rally if that happened, and the laggards could really move a lot higher. And you're starting to see that in some names. Like look at the chart here of Burlington, formerly known as Burlington Coat Factory. It's an off-price department store discount retailer. Everybody hated the stock. The stock going into this last earnings report was down 40% year to date, and then they reported pretty inline expectations, nothing to wow the market. However, on that day, the stock rallied 20%. Granted, still down 20% for this year, but even with that move, it's trailed the S&P year-to-date returns by about 40%, given the S&P's up almost 20 and Burlington's still down 20 year-to-date. Could there be some catch-up here? Who knows? Possibly. There were many other names that exhibit similar characteristics, and just slightly better metrics can really move all these beaten down stocks a lot higher. Another example might be Gap Store's GPS. If you look at it, it's up 60% this month. And there are a lot of candidates in the small cap sector, and I really think they can massively outperform in the next few months. Like I said, if we get to that 5,000 level or higher, this time I actually do think small caps are set up to outperform. A 10% in the rally could easily get a 20% rally in the IWM. And due to upside call buying, which I previously mentioned, once this thing starts moving, it can move quickly and violently due to gamma hedging. And if we got a 20% move in the IWM, you could easily find individual names that could be up 50 to 100%. Kind of like I've already mentioned. I would look to names in this sector that are making money, that have low expectations and lower PEs. You remember, it's always easy to beat low expectations. One narrative change can turn things around quickly, especially if you can identify catalysts. This is probably especially true in the areas of the market non-tech, given tech strength this year. A name like this that potentially could fit under the radar that I've had on my watch list is a name called the Geo Group, the ticker GEO. It's a small cap name with about a $1.2 billion market cap and around a 10 PE. Now, 6 years ago, the stock was trading above 30, and now the stock trades below $10. In this, you've got a recession-proof business called prisons. Yes, jails. It manages jails and detention centers. One could even argue the prisons do better in a recession if that actually does happen. So Geo's largest customer is ICE, also known as Border Patrol or the Immigration and Customs Enforcement Group. And ICE accounts for 44% of Geo's revenue. It does have a very obvious catalyst, which the market is still ignoring, which is the border crisis. The U.S. border with Mexico is an utter disaster, and everybody knows it, Republicans and Democrats. And the people are starting to wake up to it as well. The Republican House will try and pass a bill in January. That's unlikely to get passed. But if it does, or parts of it get passed, the stock will boom. The polls start pricing in a Republican winning, especially if Trump wins, whether you like him or not. This thing rallies very hard. Even if not, I think that U.S. citizens are going to start to demand better border security. And Biden will have to at least pretend to be tougher on the border going into election year. And think about this. What happens if there's a terrorist attack inside the U.S., given all the geopolitical risk that's going on right now and the lax border policy? These border crossers and immigrants, if that happened, would it be immediately round up and have to be housed somewhere? So where would they be? Well, obviously, Geo would benefit off of that. Now, even if none of these things happen, this small cap stock could easily go to $15. With catalysts plus a broader market rally, why not $20 or higher? Looking at the options market, you could pay 80 cents for the March 10 strike calls, which gets you about 4 months for this thing to pay off. The stock gets to 15, you get a 5-to-1 risk-reward ratio, over a 5-to-1. If it goes to $20, you get an 11.5-1 to risk-reward. So remember this, sometimes crime does pay. So even if you are bearish, there are cheap ways to play the upside in this market in case you're wrong. Now go out and find those things. Happy Thanksgiving. I'm Raj Malhotra. See you on the other side.